The financial markets, a world of opportunity, tens of thousands of assets to choose from. So how do you narrow it down? First, pick an asset class. There are four main types: shares in individual companies listed on stock exchanges around the world, stock indices, figures representing the top shares from a particular area, exchange or sector. Forex, the value of one currency compared to another, like the pound versus the dollar or the euro against the yen. And then there are commodities, such as gold, oil, natural gas or wheat. Now look at what interests you and what knowledge you already have that can help. Say you were thinking of trading gold. Do you know which factors and global events drive precious metal prices and why? If not, do your research. Source reliable information, look at charts, analysis, past history. Try to get a feel for the market and what it might do next. Now think about the market opening hours and whether they fit your lifestyle and schedule. Shares and commodities are traded on exchanges which tend to have fixed hours. For example, the New York Stock Exchange is open from 9:30 a.m. to 4 p.m. Eastern Time. Are you free to trade during that period? Forex markets, however, are available around the clock. How do you feel about trading something that's always active, where the price can move at any time? Then there's risk to consider. Look at the volatility of a market, how much the price moves typically in a day. Are you comfortable with that range? Some markets react dramatically to events such as economic data releases. Say you were planning a trade on a US index like the Dow Jones. You'd need to be aware of any upcoming events that could affect it, like the non-farm payrolls, for example. And you might want to try and capitalise on Dow volatility after the release, or avoid that risk. Last, look at the costs of trading. Check for any commission or spread your provider applies, and make sure the minimum trade size suits you. If you're trading using leveraged products like spread betting or CFDs, the cost of trading is generally cheaper and potential rewards greater. But remember, you can lose more than you deposit, and the higher the leverage, the more risk you're taking on. So it's important to use risk management tools such as stop losses. So to sum up, only trade what you know and what you've researched. Also think about the opening hours and volatility of a market before weighing up the costs. If you choose your markets based on the facts and not gut feelings, you'll have the best chance of success as a trader.